as it should be known, but I don't like to call it Alphabet, because that is the technical name of the holding company of Google. Although, guess what? The share code of this thing is GOOG or GOOGL, because it's got two classes of stock. We know what assets it have. We've been alluding to them, the core search engine, but in addition to that, YouTube, which is huge because video is about all of these things, and of course Gmail, and a slew of other things. But the core business that spits out all of the cash is really the AdWords business that lies at the core of the computing operation. Market capitalization, wait for it, it's a big number, $642.4 billion. So it's in that top 10 first division, not quite as big as Apple, but close. Price earnings ratio 33.13, not a dividend payer. I mean, that is what the share chart looks like, which is pretty damn good. It's been at or around $1,000 a share. It's at 915 currently. But what do you think, Nesan? I mean, we've kind of touched on the business model. Is there any reason not to just, dive in and buy them right away?
Listen, I think if you look at things like PEs and dividend yields, you might feel that, you need to stay away and then wait for it to become a bit cheaper. But I think you have to look at what's driving the underlying growth. I mean, these internet companies are very different to traditional investments. 20 years ago, biggest companies in the world were oil companies, and you had ExxonMobil, BP, Shell. All of them played in the same space, and you could use PEs to evaluate the relative expensiveness of one versus the other. But when you look in the technology space, something like Google, which dominates search, there's no other competitor. Facebook dominates social media, there's no other competitor. It's very difficult to project earnings going forward, except to know that, listen, anything that they do, they're going to do in a big way.
Because what I see is that commercial operators in the consumer environment are increasingly directing their ad spend into this environment. So we don't see it that much because we're in a market which is a little bit backward. But if you are in America and you type in, buy a new car or buy, auto insurance, those companies pay billions of dollars in order to be the top ranked solution that comes up on the Google page that you get in reaction to that search.
And funnily enough, they pay that much for good reason. Because if you look at the search analytics that have been done, a third of all searches gets the first click. So, every time you Google something, 1 out of 3 people
want to
are
be there.
Yeah.
And the way it works is that those companies bid for in an online reverse auction to be at the top. And so they're constantly busy playing each other off. And it's not just those, it's also travel opportunities, it's clothing, it's sports apparel, it's every conceivable thing that you could possibly want to buy.
Absolutely. I mean, if you've got 77% market share and 1 out of 3 people are hitting the first click, you want to be the first click, on Google.
And then
you'll pay anything for
plays out also in YouTube. So in other words, if you search on certain things, it knows what kind of ads you're likely to be interested in and starts playing those to you as well. So for example, if you're interested in sports related information, it's going to start serving you ads related to that. And those will of course be directing you to third-party powerful operators like Amazon and other online sports retailers, Adidas, Nike, and those sorts of things.
And you can subscribe as well.
If you travel, you're going to get ads for Emirates Travel or for whatever you might be using. So it's working for those companies. That's the point you're making. It's not some pie in the sky thing. Those advertisers are loving the responses that they're getting thanks to Google.
It's targeting a specific audience on a regular basis and getting them to consume more and more via the online channel.
One just final question before we go hot or not, and we've only got 4 stocks, so we can be a little bit more long-winded than usual, is that a couple of years ago the share price took a nice lift because Google hired Ruth Porat, who was an ex-banker, to come in as their chief financial officer. And the idea was, this is great because now a grown-up has arrived, because Larry Page and Sergey Brin, the founders, are still too dominant. So the view was, with Ruth Porat in there, she would make sure that they don't squander money on driverless cars, moonshot technology, anti-aging stuff, that they focus on making sure that this thing delivers to shareholders.
Yeah, and they've also got Eric Schmidt there now, who's the CEO, and he was brought in for a similar reason. Although
I think he's now the sort of chairman emeritus or something.
Yeah.
Larry Page is the CEO.
Larry Page is the CEO. I think Sergey is the president.
Yeah.
So, just to put into context, these guys came out of Stanford. The project of Google itself was actually started off as a project at Stanford.
Twiddling with search engines.
Writing an algorithm, which is really what a search engine is.
Yeah.
And so they don't really have the business background to be able to grow into the sort of business that they have today. So they
Yeah.
needed that sort of
But they've done
experience.
well. You've got to hand it to them. For a bunch of propeller heads, they've transitioned well, and they've kind of known their limitations. Okay, my view is you've got to own this one. You absolutely have got to own this one. It's synonymous with the internet. It is front and center. Sure, there's going to be a little bit of regulatory pushback in time, and governments might whinge and moan about, you know, how they are getting too powerful and so on. But you know what?
It's hard to regulate.
Shut up,
Yeah.
sit down, don't talk about things you don't know about. This is a consumer-oriented business that the world loves and wants more of.
I tend to agree with you. I'm hot on it as well.
Happy to go hot on it. Okay, good. There you go. We own them in the hot stocks portfolio.